All right, real quick one. Homeowners insurance premiums. When you get your renewal for your homeowners insurance from any insurance company and you've taken an increase, do yourself a favor before you call your insurance agent. Look at coverage A, that's the actual coverage for the home, the structure itself, and see if that's increased. That's the part that we're trying to tell everybody about, because let's say, here's an example. I had a sales manager in my office yesterday, and at the beginning of the year, they call it the replacement cost inflation factor, which that number is built off of cost of labor, cost of materials. Now we look at labor and materials increasing, shortages of those. So what it does is it automatically increases your coverage on your home, because as replacement cost is, it wants to replace your home. So it's going to automatically, with those shortages and increasing in prices, going to increase the coverage A of your home. More in coverage, more insurance. Now, to kind of give you an idea, standard practice on the replacement cost inflation factor is between 1 and 4%. That was pre this administration. With inflation as crazy as it is, labor shortage, etc., we have insurance companies' inflation factors 14 all the way up to 22%. So we went from 1 to 4%, increasing your coverage rate, which would increase your premium, right? A little more insurance, a little more coverage, a little more insurance cost. Now it's 14 to 22%, and the 22% is not a number that I've heard from one of my carriers. It's from a captive insurance company. Okay, not us. But not saying that we can't do that. But the company was in my office yesterday. They had been doing 14% inflation increases for inflation cost coverage for your home, and they're going to start bringing those down, right? I think right now they said they're at 7. By the end of the year they'll be at 4, and then by the beginning of the year they'll be back to normal, quote unquote normal. So do yourself a favor, when you get your renewal, look at it. If last year I had $250,000 coverage on coverage A on my home, this year I probably got bumped up to $275,000. I got $25,000 more in coverage, and my premium went up to take care of that cost, because we want to make sure you get your home replaced, right? We don't want to leave you stranded on a corner with a burnt down house and a check, right? With a piece of land. So their job is to make sure it's replacement. So do yourself a favor, check your renewal, check your coverage A. If your premium went up, there's a good chance a lot of it went from the coverage on your coverage A. And then companies are taking increases, period. Because guys, your milk costs more, your egg costs more. Guess what? So does expenses, so does fees, all those, etc. You can go back on one of the videos I talked about before on the profit margins and how they have to increase those premiums. I'm not going to go over that with you again. Everything is going up, guys. So your insurance is going up, your interest rates are going up. You guys have no problem going out paying 7 and 8% interest rate for a house, but you get mad when you get a 7 or 8% increase on your home or auto insurance. So it's just the life we live in right now. You don't have to take it if you don't want to. Sure, you can go somewhere online, maybe get you lower coverages, high deductibles, whatever you got to do there. Make sure you're checking that. I just thought I'd drop a little bit of knowledge on your renewals for your homeowners insurance. And that goes for independent agencies like mine and captive agencies like your State Farm, American Family, Farm Bureau, Shelter, whoever I missed. Okay? Do yourself a favor, do your agent a favor. Look that over, or ask your agent to explain it to you. So, all right, guys. Thanks. Have a blessed day, and be nice.